All right, what's going on, everybody? So in this video, I want to discuss the larger term time frame Elliott wave, and I want to tie it into what I've been talking about before of us only being halfway through this bear market and putting in an ABC pattern to the downside. So let's get straight into it, guys. I want to show you guys, I want you guys to step inside of my autistic mind for a little bit, and I want to show you exactly how I've been seeing the markets here. So let me take off the blue, take off the white. Okay, so basically what we have here is a 1, 2, 3, 4, fifth wave to the upside, putting in the A, B, C to the downside. Exactly what I've been talking about in all the other videos on this chart right here. I believe we're putting it in right here, right now. So let's move on to the blue, because the blue is telling us exactly the same thing. By the way, if you guys don't understand Elliott wave, all you got to know is that it finishes on 5 and corrects with an A, B, C. That's pretty much all we're discussing here. That's what I wanted to show you. So we have 1, 2, 3 on another count, 4, 5, and the second count gives us A, B, C to the downside, right? Same thing. So let's move on to the white. What we got here, even on the more local, shorter term stuff, we have 1, 2, 3, 4, 5, A, B, C to the downside. So it's painting a picture, ladies and gentlemen. This is painting a picture to me. Let me turn everything on. The one thing that these all have in common, the one thing that this is showing, well, more things, but the main thing that this is showing me right now is that it's ended here on the 5th, and it's correcting here with the A, B, C to the downside. Targets are all the way down to 40K, but it could be 50, between 40 and 50K are my targets. I'm going to keep this really simple because I don't want to go too in depth on Elliott wave. I know a lot of people don't really understand it, but all you got to know is that it ended on the 5th and it's correcting with the ABC. So moving on, I'll show you guys this chart a bunch of times. We have 427 days to the downside, bear market. 427 days to the downside, bear market. 427 days to the downside, bear market. And right now, where we're at, ladies and gentlemen, right here, we're only halfway through this bear market, and it looks like it's getting ready to push to the downside with this final leg to the downside, right? Keeping it super simple, the A, B, C pattern. I think we're going to be looking for consolidation around here, and then this will be an amazing time to buy. By the way, if you guys want to buy with us, make sure you hit the thumbs up and subscribe, right? So basically, okay, for a date, we got roughly November 2026 is a way better time to start looking to buy. The market's not just going to push down and shoot up, guys. These markets move in waves. That's why Elliott wave theory works so well. That's why these things, you have to have some kind of a format and structure to follow in the market. You can't just start buying randomly because people end up getting wrecked. That's why you get liquidated and wrecked if you start buying here, here, and here, right? And then by the time price gets down here, you have no money left and you're sitting in like huge drawdown, right? And it's just crazy. So if you guys want to know exactly where we're getting in, anyways, hit the thumbs up and subscribe. Let's move on really quick. This is an indicator, a signal that I think everybody should be paying attention to, but I don't think enough people are. This is the DXY. Since the inception of the DXY, we've had this long-term trend line right here, and you can see prices pulling back to this long-term trend line right here and consolidating. So it stands to reason, ladies and gentlemen, that we get a pump up to this median line or at least a 50% level in this general vicinity. And for anybody that knows, when the DXY goes up, risk on assets and traditional markets go down, and when the same thing in reverse, right? So if we get a huge pump here, this is going to send the price of BTC and the S&P 500 and all these things, it's going to send them reverse in the opposite direction, right? So this is a huge signal. I don't think enough people are paying attention to the DXY and what the DXY is doing. So I've showed this chart in other videos before. I love it, keeping it super simple. It's just showing the cycle. It's been following the same pattern since forever, right? We got bear market bottom, bull market top, bear market bottom, bull market top, bear market bottom, bull market top. So it stands to reason that around this general vicinity is where the pullback is going to end at, or this is going to be a good time to buy right here, right? Just like it was, if you would have bought here, look at that, huge rip to the upside. If you would have bought right here, huge rip to the upside. Like, you want to get in on these big moves, all you got to do is buy this area right here, right? Look at this huge move to the upside, right? Like I'm trying to keep it as simple as possible. So yeah, like this is what we're waiting on. Obviously here you had the what crash, the bug crash right here. Price went up, pulled back down. But if you look at this in a zoomed out frame, this is all consolidation. This whole level right here is nothing but consolidation in the longer macro time frames. This is just consolidation. You would have bought here, you would have been fine, right? You would have made crazy amounts of money. Everything would have been good. So moving on, this chart right here is Amazing, right? It's basically showing that we're in the denial phase of the market. I'm going to show you guys exactly what we're looking at here. So this area right here is the same as this area right here is the same as this area right here. So what we're looking at is price popping up to the 0.382 level right here, getting rejected underneath the 200-day moving average, and then putting in the final leg to the downside, right? Moving on, it's the same thing here. Price bounces up to the 0.382 level underneath the 200-day moving average and puts in a final leg to the downside, right? And I think that's what we're facing right here, right now. I think we're in the denial phase of the market, ladies and gentlemen. We're getting rejected at the 200-day moving average. We've already pretty much tested the 0.382 level, and I think BTC is putting that final leg to the downside, exactly what we were talking about at the beginning of this video, guys. I think this is going to catch a lot of people off guard, but it's not going to catch us off guard. I think all eyes need to be on this ABC pattern. This is just something that everybody should be watching and putting on their radar, definitely. And I'm going to keep discussing it. I'm going to keep you guys posted on everything. So if you guys want to step inside of my autistic mind and see exactly what I'm doing, where I'm buying and all that good stuff, then make sure you hit the thumbs up, subscribe, and stay tuned for more. I love you guys. I'm out. Peace.